Well, nobody likes to talk about death,
Mm-mm.
and getting somebody to actually sit and plan for it,
Mhm.
it's not the easiest thing to
Mhm.
do. You got to kind of disturb people and put in front of them, what if you didn't make it home tonight?
Yeah.
How's your family going to financially survive tomorrow?
This is money therapy. And remember, anything that you take care of is going to become more beautiful. Okay. So, as we move into a lot of the celebrations for mothers specifically, I'm going to be bringing to you conversations that will continue to remind you of prioritizing your money, especially as a mother. And if you're not a mother, you may have a mother. And I hope that during this series that I am able to share some financial little nuggets. They may prompt you to be inspired to implementation or be provoked into questioning. I have an amazing guest with me today, someone who has spent 25 years in the space of making sure that people can protect their income. So I couldn't think of a better person to be able to leverage 25 years of experience in income protection to really help me rein home this conversation about cash to moms about money. Thank you, Robert, for joining us today.
Well, thank you for having me, Shawnee.
Thank you. Okay, so in your tenure, in your expertise, can you share with me just your experience that you've had just with variations of mothers, maybe a single mother, maybe a widowed mother? What type of money concerns are you kind of seeing them um kind of be challenged by?
Well, I don't think it really matters what level of motherhood they're in,
Mhm.
single mother, married, widow.
Mhm.
Um, Financial issues are always at the heart of every situation.
Mhm.
And making sure the family's protected, you know, in the worst case scenarios,
Mhm.
is really important,
Mhm.
because what do mothers instinctively want to do?
Mhm.
They want to protect their family.
Mhm.
And by extension, protecting their income and protecting the funds that are available to raise their children,
Mhm.
is a critical part of managing their monies
Mhm.
and their lives.
Okay. So can you in your space, can you think of like any specifics because um my audience learns through stories. They learns through storytellings, they learn through examples and sometimes they can see themselves in the stories that we share. Can you think of or do you have the liberty to share any just not the exacts, the elaborate story, but just maybe where you saw that having life insurance, having income protection really was able to change someone's life, specifically a mom.
Well, there's many, many cases.
Mhm.
Um, but I can tell you about a case where I had a young mother
Mhm.
bought life insurance.
Mhm.
Nobody expects to die or get seriously sick when they're young.
Mhm.
We're all invincible
Mhm.
when we're young.
Mhm.
And unfortunately, she developed cancer,
Mhm.
and one day she passed away.
Mhm.
But she had life insurance in place
Mhm.
before she got sick, because you can't buy it once you're sick.
Mhm.
And she left behind the funds that were needed for her children to continue
Mhm.
and to have funds available for college. It was really important for her that her kids went to college one day.
Mhm.
And having the proceeds from the life insurance not only helped the family that was going to now raise those children
Mhm.
provide for them,
Mhm.
it also provided the assets that they needed, for the college funding.
Mhm. Yeah, that was a good story. Thank
Yeah.
you. That was a good story. Okay, Can you sometimes I know one of your roles is to do kind of like policy comparisons where someone may already have a policy in place that they feel is protecting and addressing, the deficits within their income in the event of. What are you kind of finding the questions that, generally people just kind of like forget to ask?
Well, it's not necessarily that they forget to ask, it's more that then they forget to review. You know, there are people that don't think about it until they've experienced it. They have a friend who passed away or they heard a story. So
Mhm.
hopefully this will inspire some people
Mhm.
to find the protection they need for
Mhm.
their children
Mhm.
and the rest, the family as a whole.
Mhm.
Um, but once you buy your policy,
Mhm.
it's like anything else in life. Your life changes as you get older, as your family dynamic changes,
Mhm.
as your family grows.
Mhm.
The policy you bought 5 years ago may not necessarily be the policy that's best suited for your needs today.
Mhm.
So it's really important over time to review what you have.
What would you say is a good flow of just readdressing it? Because I know sometimes when I'm speaking specifically with people, they just don't. One, many people set and forget things, so they put it in place. They think they have it, it's done, that's it, one and done. And then what do you? And then so sometimes it's because it's directly related to death. It's kind of morbid, so people don't really want. Let me go look this up. But what would you say is a good practice to have in terms of updating or looking at or reviewing? What would be the frequency of that?
Well, nobody likes to talk about death.
Mm-mm.
And getting somebody to actually sit and plan for it,
Mhm.
it's not the easiest thing to
Mhm.
do. You got to kind of disturb people and put in front of them, what if you didn't make it home tonight?
Yeah.
How's your family going to financially survive tomorrow?
Mhm.
And these are the things that people have to think about. Um, and then the cost is secondary.
Right.
Now, of course, the cost is important,
Mhm.
but I can't tell you how many people have told me they can't afford life insurance, they
Mhm.
can't afford disability insurance,
Mhm.
but they go to Starbucks twice a day spending 7, 8, $9 on a cup of coffee.
Yeah.
You do that every day, that adds up.
Yeah.
And you'd be surprised, life insurance can be really reasonable.
Yeah.
A lot of people have no clue what it costs.
Right.
And literally, that cup of coffee every day could cover the cost of a nice life insurance policy. Now, it might not cover the cost of a lifetime permanent
Uh-huh.
life insurance
Uh-huh.
policy with all the bells and whistles, but it would certainly cover the cost of a term insurance policy
Mhm.
that would be there long enough to get the children through college
Right.
or to last through your working lifetime if you
Okay.
wanted to leave
So
benefits.
so you dropped a little legalese in there. Sometimes people don't know the difference between, having a permanent policy, right? Something they're going to have for their entire lives, or sometimes people having temporary policies. And I've kind of seen people in those spaces where they think that they have coverage and then when they need the coverage, they don't actually have it. So can we spend just a little bit of time, in a very, helpful way to get people to know what kind of policy they might actually have?
I find the easiest way to explain the difference between a term insurance or a temporary policy and a permanent insurance policy.
Mhm.
Everybody understands the difference between owning a home and renting a home.
Yes.
So when you buy life insurance, you could either rent it and buy a temporary term policy,
Mhm.
or you can own it. If you own it, you never have to requalify for it again. It's yours, it's there forever,
Mhm.
or as long as you've structured the payments for. You can pay it for your entire lifetime, or you can pay a little more upfront and have it paid off by the time you're 65 if you want, or any particular age that you structure. With the temporary insurance, it's a really important tool, especially for young people.
Mhm.
Young people are facing the challenge of trying to raise their kids. It's
Mhm.
expensive.
Yes.
Daycare is not cheap. You're finding both parents are now working to maintain a house
Mhm.
or an apartment,
Mhm.
and cost is really important to them.
Mhm.
And while most people would love the idea of having permanent cash value life insurance, sometimes it's not affordable. And you can buy a lot more term insurance than you can permanent insurance for the same dollar because it's temporary.
Gotcha.
But having some coverage while the kids are growing up is certainly better than not having it because you couldn't afford permanent
Yeah.
coverage.
Yeah.
There's nothing wrong with temporary term life insurance.
Mhm.
Every product has a need,
Right.
and we have enough different types of products out there to solve the needs of different scenarios for people who are in different situations. The any life insurance you have that's in force the day you die
Mhm.
will pay the claim,
Yeah.
whether it's temporary insurance or permanent insurance.
Uh, have you seen just in your space when you're kind of doing like policy comparisons for people, what type of policies are you kind of seeing that like, gosh, this is just not going to do what you think that it's going to do? I know you think you have something here, but when you really set your eyes to it, are you kind of finding that sometimes some policies are just not what they're presented to be?
More often it's not what the client thought they bought.
Okay.
So it's important to do policy review
Mm-hmm.
um, every few years, to sit down with a professional
Mm-hmm.
who can look at what you have and make sure you understand what you have.
Yes.
There's a lot of different products on the market.
Mm-hmm.
There's a variety of things out there,
Mm-hmm.
and you have to understand what you're buying. You got to be an informed consumer. There's a lot of products that are oversold with
Mm-hmm.
what their capabilities might be.
Mm-hmm.
You see a lot of videos on TikTok and on Facebook where people are talking about, how they can be their own bank with life insurance.
Yes.
And it's possible,
Mhm.
but it's overhyped quite
Yes.
often.
Yes.
And people aren't aware
Yeah.
or they're not educated about how much they have to overfund these policies
Mhm.
to make them work as your private bank.
Yes.
So for
Yes.
the average parent out there,
Mhm.
who's living day to day and trying to make ends meet,
Mhm.
those kind of products really aren't well suited.
Right.
You
They're
know,
just
it-
not gonna even if you say,
yeah,
"Hey, you can, turn this into your own bank, and then you can start drawing out of it to open up a business within the next 3 years,"
no,
largely, the probability of that is extremely
no,
low.
the cash value growth in a life insurance policy it's a long term thing.
Yes.
It's not a quick get rich kind of scenario.
Okay.
Remember the old rule:
Mhm.
if it sounds too good to be true,
It probably is.
it probably.
It probably is. Okay, so we spoke a little bit about different type of products that you can have in this different spaces that you are. Largely, when would you say a mother should have put a policy in place for a child? When should she be making that a priority within her family? When do you think it should start?
Well, for a policy now, are you talking about a policy on the mother to protect the child or a policy on the child?
Both. You can address both.
So, it's really important for the mother and father,
Mhm.
but we're talking mothers, for the mother to
Mhm.
have a policy to protect the child because the mother's the one bringing in the income,
Mhm.
or, you have a lot of stay-at-home moms still,
Mhm.
and it's extremely important that they have life insurance as well.
Yeah.
And it's always brought up to me, well, I don't make an income. Why do I need life insurance?
Yeah.
Well, think about it. You're providing the needs of the family if you're not working, of taking care of the children, being there to take them to after school activities and
Mhm.
whatever needs to be done.
Mhm.
You're there creating that support. If you didn't wake up tomorrow, who's doing that?
Yeah.
Your husband is working full time because
Mhm.
you wanted to be a stay-at-home mom,
Mhm.
great.
Mhm.
But now that husband has got to hire somebody to take care of the things that you were taking care of.
Mhm.
So there's a tremendous loss to the family, not just because you're gone.
Mhm.
It creates an extra financial strain on the family
Yeah.
for them to be able to survive. I
Mhm.
mean, think about it. When you're a couple and you're raising your kids, you have dreams. What your family's going to be like in the future, what
Mhm.
you want for your children in the future.
Mhm.
And all of those dreams, one way or another, are tied to your financial ability to provide for your family.
It's true.
Doesn't mean you have to be the breadwinner.
Right.
So in this scenario, the stay-at-home mom's not the breadwinner, but she's just as important
Yeah.
as the other parent who's
Yeah.
out working.
Yes.
So if you're a stay-at-home mom, don't think that you shouldn't have coverage.
Mhm.
Now, for children,
Mhm.
I love life insurance for children,
Mhm.
not because we're planning on them passing away
Mhm.
while they're young.
Mhm.
For me, it's about buying a policy that protects their future insurability. You know, you don't know what your health is going to be like in the future.
Yeah.
Nobody
You don't
does.
know what it's like when you're 40.
Yeah,
When you're 4, you're not thinking about 40 or 50 or
right.
60. Mhm.
But when you're looking at your child who's perfectly healthy today, you're not thinking that they're going to have some health issue in the future.
Right.
Children's policies are really inexpensive, and you can get them with a feature called a guaranteed insurability rider.
Mhm. Mhm.
And what this feature does is no matter what your child's health is in the future,
Mm.
starting at age 25 with most companies, every 3 years through age 40, the child can qualify for additional life insurance without proving good health.
This is good.
Now, my father
Mhm.
sold my grandfather on this idea when the first grandchild was born.
Mhm.
And out of the 6 grandchildren that my grandfather had,
Mhm.
3 of them became uninsurable by the time they were in their 30s.
Wow.
Whatever the health issues, and it's not only health issues, social issues.
Social issues. So social
Sure,
issues can play a role in this
absolutely.
insurability. Tell me a
How
little more about that.
how often have you heard about a child becoming addicted?
Oh, wow.
That affects their insurability.
Oh, wow.
How often have you heard about children having mental illness issues, depression?
Yeah.
Depression is rampant out there.
Yes.
That can affect your ability to buy life insurance later on in life.
Wow.
And by having this guaranteed insurability rider on a policy, well, at all of those stages, every 3 years from 25 to 40, having the ability to buy life insurance to protect your family that you're now
Mhm.
starting to grow
Yeah.
is very important
Yeah.
because you could have had your challenges when you were a teenager,
Right.
18, 20, 30 years old, and
Mhm.
and now you're in your 30s and 40s raising a family. You still have the history.
Yes.
It's not always about what your health is today,
Mm.
because not only do you go through underwriting when you buy a policy for your current health,
Mhm.
they look at your past health as well,
Mhm.
and issues you had in the past, whether it be physical, health, mental, financial, can all impact your ability to buy life insurance.
Okay. All right. Those are very, very helpful considerations. Very, very helpful considerations. But now that you spoke about the stage of like just, motherhood, and then you kind of touched a little bit on the stay-at-home mom. What about the working mom? What type of like kind of gaps are you kind of finding with her, whether she's married, whether she's single? What kind of gaps are you kind of finding that she would need to address?
Income protection.
Okay.
Quite often, I do find people that have bought life insurance,
Mm-hmm.
but they never thought about disability insurance. Your paycheck, your ability to earn a living is your greatest asset,
Yes.
not your car, not your house. You have none of those if you can't earn a living, right?
Right.
Disability insurance, I call it paycheck insurance.
Mm.
So it protects your ability to have that income coming in.
Mhm.
You buy a policy to offset the loss of your income.
Okay.
You don't have to be totally disabled for a policy to pay benefits. Many policies out there, if you have some sort of issue that causes you to have a reduction of 20% of your income, not total disability, but
Yeah.
maybe a partial disability.
Mm.
Well, losing 20% of your income can greatly affect how the family dynamic, the family's assets,
Oh, yeah, for
how
sure.
you put food on the table
Mhm.
every week.
Yeah.
So I see the biggest need is for people to understand and recognize that disability insurance is really important.
Yeah.
It's another tool to help financially protect your family.
Yes. So as I think about the working mom, it starts to make me think more about the entrepreneurial mom.
Mm.
So I'm sure there would be a space for disability insurance and possibly also because sometimes when I'm working with entrepreneurs, sometimes they don't there's no 401k for them. They don't have those types of spaces. So how do you kind of prompt them to start thinking and putting things in place for themselves as well? What are some tools they can use?
Well, first thing, they have to sit down with somebody.
Yeah.
They got to find the time. They've
Mhm.
got to make the time to do it.
Mhm.
If
Mhm.
their family's important to them,
Yeah.
these are the things you got to think about.
Mhm.
And then it's just a matter of determining what the needs are.
Mhm.
Your needs are going to be different than mine.
Right. Right.
There's no one formula that's works for everybody.
Yes, this is
The
true.
dynamics in every household are different.
Are you seeing individuals use life insurance as a retirement tool? And just in your 25 years, how are you kind of seeing those numbers?
Well, absolutely.
Tell me about that.
So, permanent life insurance, you can grow cash value in these policies.
Mhm.
And if structured properly, they can be a big supplement to any retirement plan.
Gotcha.
You know, you can put away in a 401k, you can put money in away in your own IRA,
Mhm.
but there's limits of how much you can put away, right?
Mhm. Mhm.
If you put money away in the market, well, you have risk of the market, right?
Mhm.
But
Yes.
that's fine. You got to have a variety of assets, but having life insurance as one of those assets, I look at it as one of the conservative assets.
Okay.
You got to diversify.
Mhm.
So for me, life insurance is a really cool tool to be able to supplement retirement planning because you put away whatever you can pre-tax.
Okay.
We're all limited on what we can do.
Mhm.
And then everything you put away in most types of investment vehicles, you have to pay taxes along the way
Yes.
as those assets are growing.
Mhm.
You put money in the market and you buy and sell stocks, you're paying taxes on that stuff. You put money in CDs,
Mhm.
you're paying taxes on that as it goes. The cash value that grows inside of a permanent life insurance policy, you're not paying any taxes on the growth in that money over the years.
Mhm.
And you can overfund these policies up to a limit. The
Mhm.
IRS knows you can overfund these policies.
Mhm.
They allow us to do it and they give us a lot of latitude.
Mhm.
Um, and you could put in X amount of dollars, and at retirement time, that money could have grown to be where it's three, four, five times what you ever put in,
Yeah.
the value,
Mhm. Mhm.
how you can take that money out
Mhm.
against as loans against a death benefit over the years can come out tax free.
Yes.
So if it's structured properly, you might be able to take out two, three, four, five times the amount of money you put in. That's a lot of growth.
Yes.
And you may be able to get that money out of the policy tax free,
Yeah.
as opposed to putting it in other investments where you take it out
Yeah.
and it's taxable.
Yes.
But the big key for that to work is that the policy still has to be a life insurance policy
Right.
the day you die.
Yes.
So if you take out more money than you put in and you let that policy lapse, then any gains you had get reported to the IRS.
Mm.
So we have to structure these scenarios
Mhm.
to where that policy never lapses.
Yes.
So you don't take out more than what you should.
Yeah, because in some cases, in some cases, sometimes people can kind of overdraw out of those policies, and then when they need the death benefit, it's not there.
Right.
Yeah,
You
and
know,
those are the scenarios I don't like to see.
but remember, life insurance is a very flexible tool
Mhm.
if done properly.
Yes.
A lot of times people will buy a policy today because they need it for protection today
Yes.
and they're growing that cash value. Well, that cash value gives them an exit strategy.
Mhm.
If they don't need the life insurance later on in life, they can use the cash value as income.
Yes. Yes. I like that. Now, another question that's kind of coming up for individuals is that because of the space that we live in, the social media space that we live in, people are under the auspices that they can use life insurance for college planning as a tool for college planning. And just you being in this industry for over 25 years, what do you think about that as a tool?
that's one scenario where I do see people overselling the capabilities of a policy.
Okay.
If you're somebody with a really good income and you've got a lot of discretionary income
Mhm.
where you can overfund a
What would you
policy.
consider good income in that scenario? Over what amount?
Well,
Over 100?
it's not
What?
that it's an amount.
Mhm.
It's you have discretionary.
Okay,
You
discretionary.
know, you've
Okay,
got monies that you can play with,
gotcha. Mhm,
okay, that you can invest and you can put away.
mhm.
Um, a lot of times I see people who were sold the idea of college funding with a life insurance policy, but they were never told you have to continue to overfund this policy.
Mhm.
And you got to overfund it a lot to get, because remember, you're only talking a short period of time.
Yeah,
You know, I've
10,
seen
15
cases
years.
where I get calls from people who their children are 10 and 12 years old. Hey, I want to, you know, put money into a life insurance policy to plan for college. Well, you're not giving it enough time to really grow.
Yeah,
Um, and again, it goes to the affordability.
yeah,
If you're having trouble putting food on the table every month,
yeah.
you know, that scenario is really not going to play out.
Okay.
You know, I tell people you got to be cautious, you know, with your long-term planning
Mm,
because stuff happens in life. You know, tires on the car go bad, the washing machine needs to be replaced, the roof needs to be fixed. There's always something coming up financially that's pulling at us.
okay.
You know, so you don't want to buy a product that's going to put you in a position where now I can't pay for it because I'm paying for things that I was not expecting.
Yes,
So,
yes.
you know, it's just proper planning,
Mhm, mhm,
you
mhm.
know.
I would agree. I would agree. So now it seems that this particular economy is starting to mirror a very tough time that we had during COVID, right? So with all of the changes that we have going on, tariffs and change the administration, all those types of things, um, are you kinda seeing when we are economically nationally challenged, are you kinda seeing that, like, people kinda let go of their life insurance, or is it something that they
Yes.
hold on to in those tough economic times?
So quite often when economic times hit,
Mhm,
hard times hit,
mhm.
uh, we start getting lapse notices left and right
Okay.
because it's an expense and it's not something that they can touch and feel and
Mhm,
smell,
mhm.
you know. So, all right, well, I'll give up my life insurance right now. I'll buy it again later
Got you.
when I can afford it.
Okay.
But what people have to remember is you pay for life insurance with your money, but you buy it with your health.
Yes.
You know what your health is today.
Yeah.
And if you bought a policy 5 years ago and you let it go today,
Mhm,
well, and wait another year or two to buy it, it's going to be a lot more expensive
mhm.
because as you age, the prices go up. You know, so I would seriously caution people to letting go their life insurance if they can't afford it. Well, cut out the Starbucks.
What about, so if someone found themselves in the space where, okay, this is too costly and I am kind of feeling a little bit of the economic crunch, would it be more insightful for them to reduce the amount that they have? Would it be, what type of flexibilities do they have as opposed to just, I'm just going to let this go?
Well, that just depends on the carrier, the
Okay.
company they have their policy with.
Okay.
Some companies will allow you to reduce your benefits,
Okay.
but they can have their own rules on how
Mm,
that's done.
mm,
There are carriers out there where you can't make any changes in the first 3 years,
okay.
or they only let you change the face amount, reducing a policy once
Okay.
in the lifetime of the policy.
Okay.
Then there are other carriers out there that are a lot more flexible. They'll
Mm-hmm.
let you reduce it every year if you
Mm,
needed to.
okay.
But
So,
you can't get it back once you reduce it without requalifying again.
okay, so let's say you have a policy for $1 million and then you're kind of like, oh, I can't really afford this. Let me go ahead and reduce this to 275.
Mhm.
So you would have to wait. You may never be able to go back up to $1 million.
Not for that policy.
Not for that policy.
Once you reduce what you currently have,
Mm-hmm.
it's gone.
Wow.
You have to requalify to add it back again.
Oh,
So
okay.
you really want to think twice if that's the expense you want to give up.
Mm, Got it. So that though that would be something that I would definitely recommend if people start finding that they're in a financial crunch to be able to speak specifically with their professional, with their
Mhm.
advisor, so that they can talk about the possibilities. Just because, like how you said, you largely don't you pay for it with your money, but you really qualify for it with your
Right.
health. So this
And
is
well,
important.
so let's say the client's paying annually
Hmm.
and the annual bill came in and then they're having some economic hard times.
Uh huh.
Well, before you just give it up, try changing it to a monthly payment plan instead of an annual payment plan.
Gotcha.
And that way you don't have to come up with a big lump sum
Mm-hmm.
all at one time. Just change your payment mode before you let that valuable coverage disappear.
Mm,
Because remember, that coverage isn't for you.
yeah,
Life insurance is truly the gift of love
it is.
because it's a product that you buy, and unless you're doing it for the cash flow, it's not for your benefit.
Yeah. It's something that you give, like, to give yourself, peace, that, hey, I'm making sure that if in the event that something happens to me, that my children, my loved one has some way to essentially replace my income. So that's to be thought about. I do hope that you enjoyed this conversation where essentially you got a crash course in income protection, making sure that instead of letting things go, that you look for ways to make adjustments if this particular economy starts to offer you some things that you just weren't planning for. I'm Shawnee Curry, and this was Money Therapy. Remember, anything that you take care of does become more beautiful.